Welcome back to another schema scalper video. In this video we are going to be looking at some interesting market ideas. So we are in pound futures, 15-minute chart. Oh, it's laggy, it's so laggy. And pound futures is 6B. If you just search 6B, you'll get, nope, that's time interval. Search 6B, you'll get pound futures. And I use the CME data. I'm not sure if you have to pay for this data, but there is a way to get the free data. I'll show you guys in a future video. I'm also not sure if that's eternal. It's not eternal. What is it called? ETH? What is ETH? Electronic trading hours. Oh my gosh, eternal trading hours. Or if it's regular trading hours, the data that you'll get. I'll check it out and then I'll make a video soon about that. How to get this futures data for free. You can't trade on that platform, but it's a good charting platform. It's basically the same as TradingView, but on another website. It has all the same features. Has is this multi-screen? I don't know if it's no, that's template. No, I don't want template. It has multi-screen, all the stock indicators. The only issue is you can't save presets. So like for instance, if I'm taking my fib random, and now these are like the templates or presets that I have. You can't save those. Okay, but getting back to what we're here for, interesting market ideas. So this is gonna be part of the playlist. Let's just go back to where I got this, what sparked the interest. It was this CME group, understanding FX delivery and settlement price. So I finished this. If you want to do this this lessons, go to CME group and go to education, lessons and courses. I think it is, yeah, education, courses and lessons, and then you can just find it there somewhere. So this is what piqued my interest. This assume that Mondays preceding expiration, the expiring March contract is traded at boom boom boom. The deferred contract, the price difference between the two contracts is known as a calendar spread. The calendar spread level is important because it's a factor determining the final price of the expiring contract. In this example, calendar spread was 10 ticks, a difference of whatever British pound future stopped trading at 6:19 Central Time on that Monday. So immediately we're looking at 6:19. Well, pen to make sure of this. So it is let's say 6:19. I think I'm becoming dyslexic. 9:16. 9:16 a.m. Central Time. Monday. Okay, that's the first. In the 30 seconds of trading between 9:15:30 and 9:16 a.m., CME Clearing calculates the VWAP for the deferred contract. We'll assume that the VWAP for the deferred contract is that price. The calendar spread is then added to the VWAP to determine the final settlement price of the contract expiring of that amount. Now that we have calculated the final settlement price, physically delivered contracts, we can now we will look at how the actual delivery works. Our example showed the long position, the two banks agree as per CME group arrangement, and cash versus currency are exchanged over the bank wire. All this is completed by 10 a.m. Central Time on the settlement day, which is the third Wednesday of the contract month, 2 business days after the last trading day. So what I'm seeing here, it could be interesting, it could could work, it couldn't, it might not work, but the things that I'm looking at is 10 a.m. Central Time, third Wednesday of the contract month. So, number one, third Wednesday, contract month. Number two, 10 a.m. Wednesday. Number three, I'm looking at the time it stopped trading at 9:16. So my idea is that between 9:16 on Monday and 10 a.m. on Wednesday, the range between that is important. And then 9:16 a.m. Monday. So the first thing we're looking at, contract month. Let's get out full screen. So I don't know why it's so slow now. Contract month for 6E British pound future. Oh, this is super interesting. Contract months. There should be a. So it's March, June, September, and December. So contract months are March, June, September, December. Okay, now back to the charts. So we are looking at March. Third Wednesday, 10 a.m. And we are looking at previous Monday, 9:16 a.m. So I'm gonna use a 15-minute chart. It's not gonna be as accurate as what a 1 minute would be, but bear with me. So I'm gonna use 10 a.m. open price for the Wednesday and the 9:15 a.m. close price for Monday. Okay, let's get into it. So March. Actually, we should be looking at February because that's when it expires, and then March reopens. So let's look at Feb and then March. See if there's any difference or anything that sticks out to us. So here's February. Start of February. Oh, it's so slow. Start of Feb. First Wednesday. Second Wednesday. Third Wednesday. Okay. Now we're gonna zoom in. I'm gonna mark out 10. Well, let's actually just do this. Let's do Monday. So that's the Wednesday, Tuesday, Monday. Okay, and let's find this is all done on futures. I'm doing it on the futures chart. We're looking at 9:16 a.m. So it's 9:15 close and 10 a.m. open on Wednesday. So 9. Let's take the fib. Monday 9:16, 9:15 close. Right there, and then Tuesday, Wednesday, 10 a.m. open. So it opens a red candle, which means the high would be the open. Well, the 15 is a red candle, 10 is green, so that means the open would be there. And now we draw these levels out in time and see how they react. Okay, I can just do this actually. How do I do it? Extend to the right. Why is it not showing settings? Gosh. Okay, extend lines right. Perfect. So now let's lock this in place. Let's see if there's anything that stands out. Oh, lock it. There we go. Lock it in place. Seeing it hit it perfect there. Perfect here. Hit it perfect here. 1st of March. Okay. Let's change all these numbers to negative. -6, -7, -9, -10, -11, -12, 13, -14. How large is the range? Let's check how large the range is. That's 26 pips. And it's moving a lot between like ranges. It's not just sitting in the middle. So when there is a move, it moves. Like here, for instance, it sits in the middle, but here it hits the level, moves up to the next level, hits the level, moves down 2 levels, hits a level, move up, hits the low, moves higher. So this on its own, it's interesting. Okay, let's try and mix some things in with it. Let's put in. Okay, so the Thursday will be our first day, day 1. Let's delete this line, and let's use fib time zone. It's just gonna delineate days so it's easier to see visually. And now that's seeing, like here I can see immediately this is day open, goes down to the next level, goes to the high. Here day open, hits this level, doesn't go down. So I'm seeing if the others, the power of 3, quote unquote, power 3 strategy will work. Just sell above the open, buy below the open. So it's just like a quick representation or quick look at it. If it hits these levels and I can buy or sell it, it will be super beneficial to use this. Like here, for instance. Okay, now I'm seeing something. Okay, I'm seeing something now. Let's put on. Actually, this is my favorite indicator to use. I don't use indicators, but this is my favorite indicator. Let me just change all of these settings. So 5 AM candle, 9 AM candle purge, Sydney. Okay, let's change that to London. Actually, you didn't need to do that. Control Z, Control Z, Control Z. Let's disable all of these ones. It's not disabling. Okay, disable, disable, disable. This is something I was looking at and looking into. Let's enable Sydney. Let's change that to London. And that would be the normal London kill zone, 2 AM to 5 AM. Come on, come on, come on, come on, show me. 2 AM to 5 AM. Okay, refresh. Okay, nice. See here, it hits it in London, continues lower, hits it in London, continues lower. So now I can see easily that the times just outside of London. Why is it 4:30? Oh gosh, time is not right. GMT -4. That's right, GMT -4. But it's stopping at 4. I don't know why it's stopping at 4. Let's try GMT -5. It should shift over. Yeah, that one is right now. I don't know why the indicator is a bit. It's going crazy. GMT -5. Okay, so hits in London. Hits in London. Hits again in London. Hits that level in London. Doesn't hit any of. Okay, it hits the bottom there in London. Below day open. Hits this level. And then the next one doesn't hit anything in London. Okay, let's extend this now. Hits nothing in London. Hits that top in London. Gets there in London, goes a bit through. Hits that in London. hits that level in London, hits that level in London, below the open, so I could buy that. Hits that level in London. Smashes through, but hits this one in London, goes to the next level. Hits that one in London, pushes through. Hits this top in London, massive push down. Hits that level in London, push down, above the open. Over here hits this level, below the open. Hits this above the open. Hits this above the open. Could sell, but you would probably get stopped out. Hits this level, below the open. Buy, gets stopped out. Buy, gets stopped out. Okay. And now it becomes a bit wonky. So it's February. Oh, new idea. Ignore settlement months, just do it month on month. So third Wednesday of March we're looking at now. Okay, so March. First Wednesday, second Wednesday, third Wednesday. Until this day, Thursday, and now I remove this one. Okay. So in the next video, we're gonna be looking at it a month-on-month basis, and not just okay. Let's Control Z and put that back, because I see it works, and then it becomes a bit wonky, like starting this Monday. So I think it just needs a reset every third Wednesday. We get the time at the Monday. But if you enjoyed this video, leave a thumbs up. It's just some interesting thoughts that I got. So